Welcome back to the Daily Crypto Roundup, and it's another big day in digital assets. If you're looking at your screen right now, you'll see red. Bitcoin's under pressure, Ethereum struggling to find a foothold, and most major alts are bleeding ahead of a monster options expiry and fresh US economic data that could shake markets into the weekend. But don't tune out just yet, because this isn't just about numbers falling on a chart. It's about positioning, it's about macro, and it's about the wave of new Wall Street products that are rewriting crypto's story in real time. We'll start with the board. Bitcoin trades near $109,500, down about 1.6% today. Ethereum is around $3,980, trying to claw back flat after testing the 3,830 area earlier. Solana sits at $198 and change, XRP at $2.75, BNB near $949 after dropping more than 4%, Dogecoin just shy of 23 cents, Cardano around 78 cents, Avalanche at $28.30, Litecoin $103.90, and Polygon a touch over 22 cents. That's your top 10 by market cap excluding stables, and the message is clear. Risk-off mood, broad selling, with a few names hanging in by a thread. Why the weakness? First, billions in Bitcoin and Ethereum options are expiring. Some desks peg the notional near $20 billion, making this one of the heaviest expiries of the year. When that kind of leverage rolls off, dealers hedge, levels matter, and support bands like 110,000 for Bitcoin suddenly become battlegrounds. Hold it, and shorts get squeezed. Lose it, and hedges cascade lower. Second, macro nerves. A hot print could keep the Fed cautious on cuts, which dents the easy money story crypto thrives on. We already saw a taste of this. Yesterday's stronger-than-expected numbers clipped the market, and crypto traded tick for tick with risk assets. Third, psychology. After a euphoric summer where ETFs fueled dreams of endless inflows, reality is hitting. Bitcoin's more than 10% off its August highs. Ethereum has been lagging tech. And alts like Solana, which had been the retail darlings, are printing some of the weakest weekly candles. As Edward Moya at Oanda put it, Bitcoin is in an identity crisis, not behaving like tech when Nasdaq rallies, not acting like gold when markets get defensive. It's caught in between, and that's keeping institutions hesitant. This is where it gets interesting, because while prices struggle, the plumbing is being built faster than ever. The SEC's approval of generic listing standards this month is one of those quiet regulatory shifts that changes everything. Until now, every crypto ETF needed a bespoke filing and a long SEC process. Now, if an exchange files under the new framework, products can list in about 75 days if they meet the criteria. That's why you're suddenly hearing about waves of new ETFs on the horizon. One of them already landed. Hashdex's Nasdaq Crypto Index US ETF, ticker NCIQ. For the first time, US investors can buy a regulated basket that isn't just Bitcoin or Ethereum. It holds 5 assets: Bitcoin, Ethereum, XRP, Solana, and Stellar. That's diversification in one click, and if advisors start slotting it into models, it could quietly shift liquidity toward those alts. Then there's the one everyone's talking about, Dogecoin's DOJE. It launched just last week and did about $17 to $18 million in volume on day one. Now that's nothing compared to Bitcoin's billions, but for Doge it's historic. A coin that began as a joke in 2013 now has a ticker on Wall Street screens. Price-wise, Doge has cooled to about 23 cents. Bulls say hold the 23 to 25 cent band, and the path to 35 to 40 cents is alive. Bears warn a slip below 23 could send it drifting lower. But the bigger story is legitimacy. Doge is no longer just memes and Elon tweets. It's in retirement accounts. That changes perception forever. The funny thing about days like today is that on the surface, it feels like just another Red Friday. But under the hood, the mechanics are fascinating. When we say billions in options are expiring, let's actually unpack that. Crypto options are contracts that give traders the right, but not the obligation to buy or sell coins at set prices. When expiry hits, dealers who sold those options have to adjust their hedges. If the price is close to the strike levels with the most open interest, small moves get amplified as dealers buy or sell to stay neutral. That's why you hear people talk about gamma gravity. It's not just jargon. It's why Bitcoin can sit glued to levels like 110,000 for days, then suddenly burst higher or lower as expiry rolls off. And today, with as much as $20 billion in notional expiring, the stakes are massive. Some analysts call it the monthly reset button for crypto. Now, pair that with macro. Crypto might feel like its own universe, but it's dancing to the same tune as bonds and the dollar. When US inflation data surprises higher, yields climb, the dollar strengthens, and risky assets sell off. Bitcoin, for all its decentralized ethos, trades like the highest beta tech stock in the world on days like that. We saw it after yesterday's numbers. Nasdaq wobbled, gold barely moved, but Bitcoin slipped straight through support. Moya's line about Bitcoin being stuck in an identity crisis is perfect. Some investors want it to behave like gold, a hedge against inflation. Others want it to trade like tech, a growth asset. Right now, it's caught between the two, which is why it feels heavy. That's why ETFs matter so much. They don't just provide exposure, they shape the investor base. The SEC's generic listing rules sound boring, but they're revolutionary. Before, an exchange had to file individually for every crypto ETF, a process that could drag on 9 months or more. Now, if the product fits the commodity template, it can list in about 75 days. That's a quarter of the time. For issuers like Hashdex, that's a green light to bring diversified products to market faster. And for advisors, it means they can start thinking about crypto not as a quirky allocation, but as part of a model portfolio. Imagine a 60-40 portfolio with a 1% slice to the Nasdaq Crypto Index ETF. It sounds small, but scale it up across pensions and wealth managers, and you're talking billions in flows. The Hashdex basket itself is a quiet milestone. Bitcoin and Ethereum were expected, but including XRP, Solana, and Stellar is a statement. These aren't just maybe someday coins. They're now in a Nasdaq-traded basket on US screens, alongside regulated giants. That matters for liquidity, for spreads, and for perception. If you're an advisor who doesn't want to choose winners but wants crypto exposure, that basket is now your one-click answer. Quick pause here for a word from our sponsor. And it couldn't be more relevant on a red day. If you hold crypto directly, do not trust exchanges with your keys. They freeze, they get hacked, they collapse. If you're in Doge, Bitcoin, or anything else, protect yourself with a hardware wallet like Ledger. Offline, in your control, always safe. The link's in the description. If you're going to ride out macro chop, at least don't outsource your keys. And then there's Dogecoin. It's hard to overstate how wild it is that Doge has an ETF. The DOJE product moving $17 to $18 million on day one is like GameStop's first day as a meme stock. It's a cultural moment. Critics say it's dangerous, legitimizing a coin with no hard cap and limited utility. But we've seen this before. In traditional markets, penny stocks, meme stocks, even commodities like uranium have had their cultural waves. Doge is just the crypto version, and now it has Wall Street pipes. The comparison people make most often is GameStop. Both started as jokes, both built online communities, both tapped into rebellion against the mainstream. The difference is that GameStop never got its own ETF. Dogecoin just did. What does that mean for retail? It means your uncle who would never sign up for Coinbase can now buy Doge through his Fidelity account. It means Robinhood traders can now see Doge in their IRA screens. That's how legitimacy spreads, one boring brokerage app at a time. And price-wise, the key takeaway is relatability. If you put $100 into Doge at 23 cents and it ever revisits its all-time high around 73 cents, that's $300. If you put $500 in, that's $1,500. For small investors, those numbers are meaningful, and that's why Doge's story continues to capture attention, no matter what the charts say. Now let's widen out to Tether, because their $500 billion talk deserves unpacking. Hiring Benjamin Habel isn't just about corporate optics. Tether already holds billions in treasuries, but they've been quietly investing in energy, data centers, AI, and telecoms. The ambition is clear: to become more like a global BlackRock meets Samsung than just a stablecoin issuer. Imagine Tether-branded data centers powering AI, or Tether-backed telecom infrastructure in emerging markets. That's what Habl is meant to drive. But critics warn this could be dangerous. Tether's dominance already makes it a systemic player in crypto. If it extends into multiple industries, its reach could rival the very institutions crypto was meant to sidestep. That tension, ambition versus risk, is the heart of the Tether debate. And don't forget Morgan Stanley. The announcement that E-Trade will offer Bitcoin, Ethereum, and Solana trading in 2026 didn't make as many headlines as Doge or Tether, but it's a slow-burn story. Millions of retail accounts, thousands of advisors, one of the biggest US brokerages. Once those rails are switched on, it's like Fidelity's early Bitcoin experiments on steroids. This is how crypto quietly seeps into the mainstream. Not with fireworks, but with checkboxes on brokerage dashboards. So what does it all add up to? A market under pressure today, yes, but a structure stronger than ever. You have options expiry gravity pulling on Bitcoin, macro nerves weighing on risk. But you also have the fastest ETF approval pipeline in history. New baskets bringing alts into regulated wrappers. Dogecoin crossing the Rubicon into Wall Street legitimacy. Tether reinventing itself as a global fintech. And banks wiring crypto into traditional brokerage accounts. For traders, the short term is all about survival. Watch the 110,000 line in Bitcoin. Respect the 3.8 to 4,000 coil in Ethereum. See if Doge can hold the 23 to 25 cent range. If those levels hold into expiry, you could see squeezes higher. If they don't, be ready for hedges to cascade. But for investors with longer horizons, the story hasn't changed. The rails are expanding, the legitimacy is growing, and the adoption curve is bending up. As we head into the weekend, remember, bad day doesn't mean bad thesis. ETFs aren't going away, Tether isn't shrinking, Morgan Stanley isn't pulling back, and Dogecoin, meme or not, just became a Wall Street product. That's the Daily Crypto Roundup. Drop your thoughts in the comments. Do we hold 110,000 or break it this weekend? Smash like if you're riding the volatility. Follow for tomorrow's update. And as always, secure your crypto with Ledger using the link in the description. Thanks for tuning in, and we will see you at the top.